So just a bit of background here, guys. I've already noted here that it's not legislation. Companies Act is legislation. This is not. It is a voluntary code. However, if you want to have best practice for governance, then you should be applying King. So it gives you the recommended leading practices for how governance duties should be discharged. Okay, so although it's voluntary, it is highly pushed on you to adhere to this, because if you are, then you should be adhering to good governance within your business. And guys, back to that video, the fact that it is voluntary also shows that we have flaws, because companies can say, I didn't, and there will be no penalties for that. Whereas if you don't comply with the Companies Act, the legislation, there will be consequences. Okay, but it should be applied. And if you are listed, part of the listing requirements are that you adhere to King. So it's not King that makes you because you're listed, it's the JSE listing requirements that say if you want to be listed, you must comply with King. Okay, if there is conflict then between King and any other legislation, the legislation prevails because it is not legislation. This King has adopted the apply and explain principle. So, for every principle in the King, you as the company to apply it and then explain how you have applied. So it means that your integrated report is going to be very long, saying these are the 17 principles of King, this is how we have applied it. But what it also does now create is some kind of objectivity within the company, saying here's the principle and this is how we have interpreted and applied it, as opposed to if it was apply or explain why you are not applying, then they would have to justify that they actually are not applying it. This is what they've done. So this creates a lot of opportunity for non-compliance and their own justification for how they believe they are compliant when in fact they are not. Okay. Its objective is to promote corporate governance as an integral part in running an organization. So not just about going after profits. Make sure that this business is governed effectively, ethically, so that all stakeholders are considered in the governance of this company. So it is the very airy-fairy emotional side of running a business, but it's crucial because it considers everyone who's affected. And then I've just made a note here, key terms or differences from what you're going to see in the Companies Act versus King. The governing body is now going to be used in King's terms, but ultimately, if we're looking at a company, it is the board of directors. And they use members, but ultimately, if we're looking at a company, it's the directors of the company. And guys, you will most likely be looking at a company because when they want to test King and governance, they will be testing Companies Act too. And so if they had to give you a closed corporation, then you wouldn't be tested on Companies Act in addition. So they'd have to give you a full another scenario of a company to test Companies Act. So as you've seen already up through until now, you get tested on a company that you are auditing. A public or private, that's going to differ in terms of the requirements of the Companies Act, not in terms of the requirements of King. All companies should be adhering to this, whether you are public or private, is irrespective. Okay, let's start with it.